his hip and busted his lip. For a week he had to talk with a list like this. Now we can end the story right here, but shorty didn't quit, it was something in the air. Yeah, he said it was something so appealing, he couldn't fight the feeling, something about it, he knew he couldn't doubt it, couldn't understand it, branded, since the first kick flip he landed, labeled a misfit, a bandit, cocoon, 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 his neighbors couldn't stand it, so he was banished to the park, started in the morning, wouldn't stop after dark, yeah, when they said it's getting late.
Oh man, the love of skateboarding. Brandon, I hope you watch at least some of these shows sometimes. All right, cool. Let's take a look. Welcome to MoleHill Mining. This is hopefully educational, perhaps entertaining, but it is never ever to be construed as financial advice. You'd be a goddamn idiot to listen to me. All right, next, let's look at the market in general. Yeah, whatever. A lot of red. Not for Bitcoin. But so what we might figure from that is maybe some of the small caps are moving into Bitcoin as it's going up. You know, usually is what happens, and it diffuses a little bit later on. That is part of the cycle. So let's take a look at the top 10. Bitcoin's at the top, 55.3. It's a little bit down from earlier, but it still says 3.41 on the 24. Ethereum is in second as usual, 1.7. Binance is in third, huh? Good. That's a blast off. 279. Was that the same way this morning? I don't think so. Tether, I think, moved up from 4th to 5th. And then we got Cardano, $1.12, down to 5. Polkadot still in 6 at 36.67. XRP in 7th place at 45 cents. Uniswap at 30.11 in 8th place. Litecoin at 197.49. And Chainlink at 29.16. Alright. Let's let it ride. And let's go to the chart. Alright. So yeah, it's down from when we chatted. I think that's what I meant to say. Yeah, that is what I said. And then just on the 24, we're still up a little bit. So let's see. We talked about 11 and a half hours ago. We're down just a little less than 3%. We did pass down underneath the cloud, and we're looking at some really thin resistance overhead. Let's get a little more detail on stuff like that. Okay. So we had a few crosses in the last 11 hours. So when you start to see that kind of thing happening, it's just like less and less predictable, less and less reliable, if that makes sense. So it's hard to really make a hell of a lot out of that. But let's go ahead and see what we can see at least. The conversion line is below the baseline. Baseline's running pretty flat. Conversion's falling, and then they're both trading above the lagging indicator. So all of those are downward signals, plus it's under resistance as thin as it is. Every single signal there is downward. The EMAs aren't flipped completely for the most downward pressure, but they are preparing to do so. As these three don't go by, and this fourth one stays more flatter than them, and it will, as long as this continues generally downward, then you'll see more pressure. So the more it goes down, the more pressure to go down you'll see. But yeah, generally speaking, I mean 55, it hasn't bounced off of 55 yet, except for kind of a little bit earlier today, like 5:15. But regardless, do I think it'll bounce off 55? I don't know. I don't think it'll dip too far below, even if it doesn't. So I don't know if the number matters very much. Will it bounce off of? I don't know. We'll see. Let's look tomorrow. All right. Let's look at Probit. Announces support for Binance Smart Chain to promote interoperability. So basically, Binance Smart Chain is a rip-off of Ethereum. It is completely centralized. It is part of... I brought this up to show you guys. So Binance is half, damn near, of the, of at least the verified. I should actually do this. It's, a little over half of the verified exchange market. So not only is it not centralized, or decentralized, I should say, it is problematically centralized. It isn't like one of these little guys over here having a centralized blockchain. No, it's like also the biggest centralized exchange. So it's not like, I don't know. I'm not like super stoked on this this as a product, I guess. But Probit is one of the smaller exchanges. It's I guess based out of Korea. Let's see. Yeah, so they're gonna run a decentralized exchange as a sort of like intermediary on the Binance Smart Chain that's gonna directly operate or interact with their centralized exchange. So that's kind of an interesting little, I don't know, side I don't know, connectivity thing. Cool, cool. Ethereum miners plot hash power show of force against EIP 1559. Yesterday I did a news story about that, so I won't even get into tons of detail because obviously that's happened already. But let's see. So yeah, I've talked about this in general on the show, but the basic idea is that it's a fee restructuring where they're like prices are too high, so they need restructuring. What does this do? Well, it won't really lower fees all that much, but it will burn a lot of the ones that went to miners. To which miners replied, well, why burn them? And the answer is basically so the price goes up. There is a problem about this. It gets into a lot of detail about like what's called hash brokerages, and that's something like Nice Hash, which is already a shady AF fucking product that I'm bummed out that people use. But like they do, and it's out there. So the problem is when those algorithms start to move hash power around, or people go from mining Ethereum directly to one of those brokerages, which could mine Ethereum on the days that it's the most profitable. They're worried that it's going to get attacked. Me, like I'm part of that group too. Like we are worried that it will become attacked. So let's see what is wrong. So this is from Bitsby Trippin. What it is showing is if you have a misalignment of incentives, you can get the network into a position where a would-be attacker could put a price out there, pay a lot more for that hash power that just got kicked off. So what I'm just saying right there is like people are like getting kicked off. That's what I mean by they're like, I was on an Ethereum pool. Ethereum's dropping so rapidly. I'm gonna jump on to Nice Hash or something like it, and then someone's gonna go to Nice Hash and 51% attack the greatly reduced Terra hashes on the Ethereum network. That is what we are worried about. So basically, miners are worried about it. Everyone else is not. I go into who this dude is and his paper he wrote about it on the video. It's worth looking into if this is at all interesting to you, or if mining was at all something you're interested in. But yeah, Vitalik is worth noting. He says that if demand to use Ethereum is high enough, there would be more Ethereum being destroyed than is being created. I mean, that's going to cause the price to go absolutely fucking haywire, which is good for people who have it stacked. I have some, and that would help me tremendously. But I just don't know, like, if it works out, right? And it could. But if it doesn't, and the network is rendered useless by a hack, well, what good is all this inflation you were hoping to see? Deflation you were hoping to see in the currency. And when I say deflation, it actually means it's worth more. So keep in mind, we always talk about inflation in the U.S., and that means that our dollar is worth less, So, blockchain group, blah, 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 blah. Alphabet Soup reiterates concern over proposed European regulations. Basically, they do not favor the regulations do not favor emerging cryptocurrency blockchain firms. EC's legislative proposal offers a significant advantage to incumbents in the legacy financial system. So, it's pretty clear. Brick and mortar banks are going to get fucking, a goddamn red carpet rolled out to them by legislators to just come and ride roughshod over what people have built over the last 10 years. I mean, why wouldn't they? Opposition often revolves around the cost of compliance. Yeah. Majority of participants did agree with the notion that some MICA or some legislation of some kind would bring legal certainty to the European digital asset space. Indeed, if approved, the framework could make it easier for crypto businesses to operate across the EU and put an end to regulatory arbitrage across the EU. Yeah, that's important. If one country is just so lax, they get all the business. That's kind of shitty for everybody else who's trying to actually protect customers, and that doesn't grow the crypto scene in the end, because then if like all of it is just like all the projects move to that one country, and then all of the projects get all shady and seedy, you know, like it doesn't help the scene in the long run. So yeah, I get that. I see what they're saying. Yeah, it just sucks. All right, well, that's the end of the show, man. Have a good night. Good.